I think gold could actually still have a pretty big correction if the stock market and the economy kind of goes, down the toilet, and we see kind of a financial reset. I think we could see gold potentially back down to $1,700, $1,600. And to me, that's not a bad thing. It's not that far from where it is. I think it'll be an opportunity. But once that downside potential panic selling has taken place, I think we're going to see gold rally next year, probably 2,700 very quickly. The question will be if it can get up into that 3,000, that 3,400, $3,500 mark, US dollars. So I think next year we're going to see gold hit 2,700 at some point. But I do think there's actually some weakness in the precious metals space until we have this financial reset.
Chris Vermeulen is the founder of Technical Traders and has been involved in the markets since 1997. Over the next 6 to 8 months, Chris holds a bearish view on gold, but he expresses strong optimism for gold in the following year. Gold Investor Research recently posted a tweet mapping an 11% inflation expectation and a 10 years yield between 3% to 4% would imply a gold price of $6,000 to $8,000. The 3-year consolidation is almost complete, and we expect a rally towards $3,000 over the next 12 to 18 months. Gold miners could explode higher, and silver may retest $50. Chris' bullish stance on gold is driven by a short-term stock market sell signal, leading to a flow of funds into defensive areas such as gold miners. Notably, gold miners, such as Gold Road Resources and Silver Lake Resources, outperformed, up 12% and 8% for the month due to a rebound in gold prices. Chris anticipates the potential impact of a gold-backed currency potentially driving gold even higher. A BRICS currency could have gold as a backstop, making it attractive versus the U.S. fiat dollar, which derives from full faith and credit of the U.S. government. Now we are presenting you the glimpse of Chris Vermeulen insights from his recent interview with SOAR Financially. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
Yeah, I mean, gold's doing exceptionally well. When you look at, the monthly chart of gold, yeah, it's been trading down and sideways for like 3-4 months, but really it's still trading. When you look at the big picture, it's trading right up near all-time highs. I mean, it's not far away. It is a very strong asset. It's known as a global kind of defensive safe haven play. So it's not just, North American people buying into gold. It's the whole world is nervous, and they continues to just keep trickling into gold, and it's holding its value. You look at gold miners, they're down like 45% from all-time highs, where gold is right up there. And that to me is a sign that we're seeing, global fear. It's not just speculative, money moving around. It's a lot of countries, a lot of different people constantly buying gold as a kind of defensive play. So the fact that gold's holding up really well is a very good sign. And I think eventually, I think next year it's going to have a very big rally to the upside and start to hit those big upside targets that a lot of people have been waiting years for. And it's going to just put some pressure on precious metals, simply because almost every time when we see a financial crisis take place, a big bear market, the dollar tends to be a safe haven play. We see the dollar index rally. It is one of the reasons why gold goes lower. Plus, there's going to be forced liquidation margin calls that pulls gold lower as well. And, it's just part of the way the markets are all interwound. So a little bit of weakness in gold, is perfectly normal. I think it'll be a screaming buying opportunity. But as I mentioned earlier, to try not to confuse people, I think gold, silver, and miners are going to be very strong here for the next couple of weeks as money's just starting to rotate into them. We got a short-term kind of sell signal on the stock market. So money's moving away from stocks, and they're looking for defensive sectors like gold miners or different assets to move to right now. So short-term, I'm bullish on gold. Over the next 6-8 months, I'm actually bearish on gold. And then next year, I'm really bullish on gold. So, you have to understand what time frame you want to focus on paying attention to, or know, understand that. I mean, it's more of a speculative play. Everybody loads up on it, hoping for that big grand slam move sometime. But typically when gold's moving up, silver is going to be moving up, and they're all kind of the same trade. They just move a little differently percentage wise. The silver's way down. It's like 40% off its highs, just like gold miners, which goes to say it definitely falls into the speculative category. People who are really nervous globally with large amounts of money aren't piling into silver and gold miners. they're actually accumulating and holding gold. And that's why gold is holding up so high. And there's also the other play that there's talks about a gold backed currency. And if that happens, I actually think that could trump everything and send gold a lot higher. It could eventually also help boost silver. If gold rallies, silver usually gets pulled up with it as a little brother. So I think there's some interesting wild cards at play. But again, silver, I think, is going to be under pressure with the markets and gold if the market goes into a deeper correction. But it'll be kind of that last, I think, key pullback before we start that next major rally. Silver, 50 plus, I think, is very easy to happen in the future. But it still might have a pretty good haircut back down to that $18 mark over the next 3, 4, 5 months.
During the interview, Chris Vermeulen discussed dollar strength because of its global reserve currency status, while foresees short-term bond market challenges leading to notable bond rally. Meanwhile, the correlation between stocks and bonds has been positive since early 2022 as markets braced for the Fed's tightening campaign to quell soaring inflation. Just over 50% of survey takers expect that relationship to turn negative by the end of this year, reverting to the long-term trend of this century. Chris predicts possible 5% to 30% rallies for gold miners such as GDX and GDXJ, citing parallels to trends seen during the 2007 to 2008 financial crisis. In anticipation of the incredible gains the junior sector should begin to experience once the gold price prints a technical breakout above $2,100, the Junior Miner Junkie, JMJ, newsletter has accumulated a basket of quality juniors with 3x 10x upside potential into 2025 to 2026. Let's get back to interview.
Right now, I think we're seeing just money want to look for safety in the precious metal space right now, and they're moving to cash and the dollar. We're seeing the dollar index hold up. Bonds, I still think there's more potential downside for the bond market. I think longer term, the bonds are going to have a miraculous rally at some point. I think it'll be a fantastic opportunity, but they're still in a very strong downtrend. There's potential rates could keep going up. So it's bottom picking, and bottom picking is never good because the market can keep falling. And bonds are down like 40+%. It's not something you really want to just try to pick a bottom. That's not the way that I go about things, but bonds could become one of those plays where people will be like, well, they're so oversold, I don't want to own stocks. They might go back into bonds, and eventually we'll see the rates start to get cut if we go into a kind of a recession, and that will spur the bond market rally. So there will be definitely a big battle between, people wanting to own bonds, and bonds will have a big rally at some point, but it's a little early still. Yeah. Well, what's interesting is the way I use technical analysis, cycle analysis, and how I use intermarket analysis, which is, as you know, most asset classes are connected in some way. If something goes up, something goes down somewhere else. Money is constantly shuffling and shifting around through the financial markets. And what's really interesting is when the stock market was out of favor, this was early this year, and even parts of last year, we saw the gold miners rally very, very well. They took the lead and went higher while the stock market was not favorable. As soon as we got a buy signal in the stock market, we moved into tech, the NASDAQ, the SP 500, the stock market took off. Gold miners put in a double top this year, and they've been going sideways and lower pretty much, for several months. And what's really interesting is the market just turned and gave us a sell signal last week, and gold miners have found a bottom. They're starting to rally and move up with some pretty good volume and some power behind them. So we're seeing definitely money's rotating, as you're saying, out of equities, out of growth stocks, and now it's starting to actually rotate into the precious metals space. I think there's room for gold miners like GDX, GDXJ to rally, 5, 20, 30% potentially, maybe go up to the recent highs that they had as that defensive play. And we've seen this before in 2007, 2008. We start to see the stock market become weak and money piles into commodities like the precious metal space very quickly. And so I think we're back into that. And I'm looking at higher prices for the miners going forward.
The latest Kitco News weekly gold survey shows that over 2/3 of retail investors expect gold prices to post gains during the shortened week ending September 8th. Meanwhile, economic outlook indicates that there's substantial room for growth, particularly in gold miners. Do you think gold prices will potentially rise in the coming year? Share your thoughts in comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.